Hey everyone! If you're currently on Social Security or Medicare, I need you to stick with me through the end of this video, because what I'm about to reveal could save you hundreds, and in certain cases, thousands of dollars every single year. And I mean actual money, not the type of savings where you use coupons and feel pleased about 50 cents off a can of soup. I'm referring to major recurring expenses that you are covering every month that you legally don't need to cover at all. Here's the reality most people never discover. A massive number of American seniors are quietly overspending on bills that the government is meant to handle for them. Not because they made any mistake, not because they aren't eligible, simply because nobody ever informed them the programs exist. The money is available there. The applications are ready, and every month that passes without applying is another month of overspending for something that should already be taken care of. I reviewed federal law, Medicare regulations, and everything that shifted in 2026. And I identified 5 specific bills that millions of seniors are covering right now when they legally don't need to. I'll go through each one, explain exactly who qualifies, what the figures look like, and what to do about it. Stay until the end, because number 5 is the one almost nobody discusses. And for homeowners, it could be the largest of all. Real quick, before we dive in, if you're not subscribed to this channel yet, press that button right now and enable notifications. The rules surrounding Medicare and Social Security shift every single year. Income thresholds change, new programs launch, old ones get revised, deadlines appear and disappear. I explain all of that in plain English so you always understand what you're actually entitled to before it's too late to act on it. The people who are subscribed stay ahead of these things. The people who aren't tend to discover them too late. So subscribe now, and let's dive in. Bill number 1, the $185 Medicare Part B premium. Every single month, that amount gets deducted directly from your Social Security check. Most people just accept it, never question it, never investigate whether it has to be that way. What they don't realize is that there are federal programs called Medicare Savings Programs that will cover that premium for you entirely every month through your state Medicaid office. There are 3 tiers depending on your income level. The most comprehensive one is called QMB, Qualified Medicare Beneficiary. And it doesn't just handle the Part B premium. It handles your deductibles, your co-payments, your co-insurance, essentially everything Medicare would normally require you to pay out of pocket, gone. Covered by the state on your behalf. If you're single with a monthly income under approximately $1,350 or under $1,824 as a married couple, you very likely qualify for QMB. If your income is slightly higher, up to around $1,616 a month as a single person, there are 2 other programs, SLMB and QI, that will at minimum eliminate that $185 monthly charge entirely. The reason millions of people don't have this is simply that you must apply. It doesn't happen on its own. It's not automatic. Nobody enrolls you. You have to go seek it out. Call 1-800-MEDICARE or visit Medicare.gov to locate your state's Medicaid office and submit that application. Bill number 2 is prescription drug expenses. A lot of people think, I've got Part D, I'm covered, I'm set. But covered and free are 2 entirely different things. There's a federal program called Extra Help, sometimes referred to as the low-income subsidy, and if you qualify for it, your prescription situation changes completely. No Part D premium, no annual deductible, and the most you would ever spend for a covered medication is $5.10 for a generic, or $12.65 for a brand-name drug per prescription. That's the maximum. Compare that to what people without this program are spending: $50, $80, sometimes over $100 a month for a single medication. And you begin to see how much money gets left on the table year after year. The income cutoff for Extra Help in 2026 is approximately $23,940 a year for a single person, which is roughly $2,000 a month. Now, here's a shortcut a lot of people aren't aware of. If you already got approved for any of the Medicare savings programs I just described, you are automatically enrolled in Extra Help. No separate application, it just activates. If you haven't done either yet, apply through Social Security at ssa.gov or call 1-800-772-1213. Number 3. Heating and cooling expenses. Energy costs in 2026 are genuinely difficult right now. Home heating is up nearly 9% over last year, and electricity is up over 12% in many parts of the country. For anyone on a fixed income, that's not merely uncomfortable. It's a real financial burden month after month. What most people don't realize is there's a federal program called LIHEAP, the Low Income Home Energy Assistance Program, and it pays your utility company directly. Not a coupon, not a discount percentage off your bill, an actual payment made directly to your gas or electric provider on your behalf. Income limits vary by state, but if you're a single person earning around $22,000 a year or less, there's a strong chance you qualify. And here's something that matters specifically for seniors. If you're 60 or older, you receive priority access. In most states, you can apply a full month before the general public window opens, and that makes a real difference because LIHEAP is first come, first served. Once the funding for the year runs out, it's gone until the next cycle. There's also a connected program called the Weatherization Assistance Program that will actually send someone to your home to insulate it, seal up drafts, and repair or replace your heating equipment, all at no cost in a way that permanently reduces your energy bills long term. To find your local LIHEAP office, simply dial 211. That's the National Social Services line, and they'll direct you exactly where to go. Bill number 4 catches a lot of people by surprise, and it involves a Medicare surcharge most people have never even heard of. It's called IRMAA, Income-Related Monthly Adjustment Amount. If you earned above $106,000 as a single filer in a previous year, Medicare doesn't charge you the standard rate. They charge you anywhere from $284 to $689 a month for Part B alone, deducted automatically from your Social Security. A lot of people notice a smaller deposit and just assume that's how it works. Here's what makes this particularly unjust for retirees. Medicare uses your tax return from 2 years ago. So if you retired last year, sold a property, completed a Roth IRA conversion, or had any kind of one-time income event that temporarily raised your earnings, you could be paying a massive surcharge right now based on money you no longer have and no longer earn. And the fix, almost nobody pursues. You can appeal it. There's a specific form called SSA 44 that exists precisely for this situation. For people who've experienced a life-changing event like retirement, loss of income, death of a spouse, or reduction in work hours, you file the form, demonstrate what your income actually looks like now, and the surcharge gets reduced or completely eliminated. People are recovering $200, $300, even $400 a month back by doing this one thing. You can download SSA 44 directly at ssa.gov or pick it up at any Social Security office. And bill number 5, property taxes. If you own your home and you are 65 or older, I want you to consider the last time your county government sent you any kind of letter explaining your rights as a senior homeowner regarding property taxes. For most people watching this, that letter never arrived. And yet, nearly every state in the country has programs. Senior property tax exemptions, senior freezes, circuit breaker credits that can lower the taxable value of your home, cap your bill so it can't keep rising year after year, or in some cases, eliminate a portion of your property tax entirely. We're talking anywhere from a few hundred to several thousand in savings every single year. The catch is always the same thing. You have to apply for it yourself. Nobody handles this for you. The county assessor does not reach out when you turn 65 and say, "Here's your exemption." You have to know to ask. Just search your county name plus Senior Property Tax Exemption 2026. Or call your county assessor's office directly and inquire what programs are available for seniors in your area. One phone call, that's it. And those savings can follow you for as long as you own that home. So let's bring it all together. 5 bills. The $185 Medicare Part B premium that savings programs can eliminate completely. Prescription drug expenses that extra help brings down to almost nothing. Energy bills that LIHEAP pays directly to your utility company. The IRMAA surcharge that you can appeal and remove with Form SSA 44. And property taxes where senior exemptions exist in nearly every state, but only take effect when you apply. None of these programs come searching for you. You have to know they're there and take one step to claim them. That step is genuinely the only thing standing between you and the money. If this video helped you, please subscribe and forward it along to someone you know who's on Medicare or Social Security. A parent, a neighbor, a friend. One conversation can change someone's financial situation for years. I'll see you in the next one.